Hello friends, welcome to this lecture. So in today's session we are going to discuss our PPB unit number 1, which is based on banker customer relationship. So each and every concept will be explained in English only. We have separate video for Hindi students. So those who want to learn this concept in Hindi, so I am linking the playlist of the Hindi section in the description section. You can find there. So this lecture will be entirely explained in English. So now let's begin our discussion. But before beginning, let's see what are the topic we are going to study. So the first thing we will see is what is the requirement to be called as a bank. Okay. So for a bank, what is the requirement? This is the first topic that we will see. The second topic we will see who is a customer, what is the definition of customer. Then after there are some relationship which we will go through. Okay, like debtor creditor relationship, like creditor debtor relationship, bank as a trustee, bailor bailey, agent principal, lessor lessee, indemnifier indemnified. Then after we will see different deposit product or services. Then after we will see deposit products. Okay, so these are the topic we are going to discuss in today's session. So let's begin with the first session, that's requirement to be called as a bank. Okay, so what are the requirements under which we call a bank as a bank? Okay, so that is what we are going to study right now in the first session. So let's begin. So friends, it has been explained that accepting for the purpose of lending. So you know what is a bank? Bank is an institution. Okay, so what does it do? It takes money from individual. So this is an individual, it takes money from them, bank take money from them. Okay, and from individuals, from businesses or other organization. In what is the intention? Intention is that using the money for what? For loans. Okay, so using the money for loans. Okay, and or to make investment, using the money for loan or using the money for investment. So this is the main purpose. So this means that when you deposit money in a bank, they can use it to lend to other or invest in a different way. So that's the main purpose of lending, right? So let me give you an example to make this concept more clear, that what is the exact definition of banking. Let me create an example so that it becomes clear to you. Suppose you deposit $1,000 in a bank, right? What you do? You deposit $1,000 in a bank. Okay, so they can use that money to provide a loan of $800 to someone. Okay, so out of this $1,000, $800 can be used to provide loan to someone who want to buy a car, and keeping $200. Okay, $200 they keep for investment purpose. So this is how it's carried out, how the banking operation is carried out. Out of the total money that they receive, some portion is allocated for the loans and some portion they keep for the investment. Okay, hopefully you have understood the criteria. Now let's see the next point. The next point is repayable on demand. You see the word is written repayable on demand or otherwise. What does it mean? And so it means that banks allow depositor to withdraw their money whenever they want, either immediately or after a specific notice period. And they provide various methods of withdrawal, like they provide check, they provide draft, they provide other and otherwise. So let's say you have $500 in your bank account. How much you have? You have $500 in your bank account, and you need to pay your monthly rent of $400. Suppose your monthly rent is $400 and you need to pay it. So you can write a check for $400 to your landlord, and the bank will honor it by deducting the amount from your account. So I have explained the meaning of banking in different aspect of banking. Now the next topic that we have is the deposits, or what are the essentials to satisfy the requirement of the definition. The first thing is deposits. What does it mean? The banks are primarily focused on using the deposited money for lending it to individual. So what does bank do? So whatever money is deposited, so that money is used for lending. That money they use for lending, or they are using the deposit to manufacture and supply furniture rather than primarily lending or investing the money. So in nutshell we can say an institution to be called as a bank, it needs to accept deposit from the public for the purpose of lending or investment. It allows the depositor to withdraw their money on demand or through a specific method. Now let's move to the next slide, and let's see some other concept which have been explained here. So the deposit should be made from the public. What does it mean? So it means that for an institution to be considered as a bank, it must accept deposit from the public. So here public role is very important. Okay, it must accept deposit from whom? It must accept deposit from public. Okay, and meaning anyone can deposit money with them. Institutions like nidhis, you know the meaning of nidhis. Have you heard the meaning of nidhis? So these nidhis are what? These are multi benefit society, right? So what is nidhi? Nidhi are multi benefit society, and you might have heard about cooperative society. So this nidhi and cooperative society only accept deposit from their own member and not from public, right? So you know nidhi, this cooperative society, they accept, they don't accept any deposit from any public, right? They accept deposit from their members only. So let me give you an example to make this concept more clear, so that the clarity in concept is very important here. So let me give you an example to make it more clear. So friends, a credit union, you can take the help of credit union. Okay, so a credit union that operates within a specific community and only accept deposit from its member who live in that community would not be considered as a bank. So can you tell me, will you consider credit union and a bank? Answer is no. Why no? Because it is not accepting deposit from the public, right? It is accepting deposit from its own member only. Similarly, I have talked about nidhis, okay, cooperative society, which accept deposit from its members only. It does not accept deposit from the public. So they are not called bank. Okay, banks should accept deposit from the public. So that's the definition of acceptance of deposit. The second point is acceptance of deposit should be in the form of money. So see, try to understand money lenders. Okay, you know about money lenders. So tell me, money lenders are bankers or not? They are not money lenders, they are not bankers, right? To be called as a bank, an institution must accept deposit in the form of money. Money lenders or individual lender who provide loan but do not accept deposit from the public are not called bankers. Okay, so to be called as a bank, an institution must accept deposit in the form of money, right? So suppose an example I am giving. So here it is written, money lenders are not banker. Why they are not banker? Because to be called as a bank, an institution must accept deposit in the form of money. So for example, a person who lend money to other but does not have a system for accepting deposit from the people would not be called as a banker. So money lender, what they do? They lend to the people. Okay, they don't accept the deposit from the people, so they are not called bankers. So for example, a person who lend money to other but does not have a system for accepting deposit from the public, okay, so would not be called a banker. They may give out loan, but they don't operate a bank by taking deposit from the individual. So this is the correct definition of banks. The next point that we have is acceptance for the purpose of lending or investment. You see here it is written, acceptance deposit for the purpose of lending or investment. What does it mean? So it means bank accept deposit with the intention of using that money to lend it out to the borrower or invest in various venture. So suppose an institution, it accept deposit from the individual but keep the money idle without using it to provide loan or making investment. So it would not be considered a bank. Bank actively use the deposited money to lend it to a borrower or invest it in different project. So hopefully you have understood the definition of bank. So let me summarize. The first thing is that to be called as a bank, it must accept deposit from the general public, not its own member. अपने member से, from its own member it should accept, but besides that it should also accept the deposit from the public. The first condition is this. Second condition is this, the deposit should be in the form of money. The third condition is this, and the institution should have the purpose of using the deposit for lending or investment. So there should be two purposes. The first purpose is lending and the second purpose is investment. And the third condition is money lender or institution that accept deposit only from its member or entities that not use the deposit for lending or investment would not meet the requirement of a bank. So these are very important definition of bank. Hopefully you have understood what are the criteria to be made for an institution to be called as a bank. Now let's see the next point. So the next point is has been explained here, is that acceptance for the purpose of lending or investment. We have discussed all this thing. Okay. The next thing is deposit repayable. You see here it is written, deposit repayable to depositor on demand or otherwise. So this is also essential definition, part of the definition. So what does it mean? It means that when you deposit money in a bank, you have the right to get that money back either immediately upon request, on that is called on demand, or after a specific period if it is a fixed term deposit. So if it is a fixed term deposit, you after a specific period you will get back your money. Period of 1 year, you will receive your money along with the interest after the completion of that 1 year term. So that's the difference between saving deposit and fixed deposit. Hopefully you have understood. Okay. So that depends on the circumstance, whether you have which type of account, that depends on type of account. Okay. The next point that have been explained here is banker customer relationship. Now let's come to the real chapter. This was the introduction part. We have discussed what is the bank, what are the criteria to be fulfilled to be called as a bank. Now let's discuss what is the banker customer relationship. So friends, for the purpose of KYC, you know, KYC means know your customer. So a customer is defined as the following. Now let's see how a customer is defined. Okay, so now let's see the correct definition of a customer. So first thing is that customer, who is a customer? Customer is someone who either holds an account with a bank, has an ongoing business relationship with the bank. So see, here it is written, who either hold an account with a bank. So customer has an account with a bank, first thing. Okay, the second point is that he conducts a transaction with the bank, okay, or carry out transaction with the bank. This definition helps bank identify and verify their customer. So suppose you have a saving account with a bank and you have taken a loan from that bank, you are considered a customer. Additionally, if you frequently conduct transaction with that bank, such as making deposit, withdrawal, or using that financial service, you also classified as customer. Okay, so this is how the KYC has been defined. The second point is that you can see one on whose behalf the account is maintained. What does it mean? It means that a customer can also be someone for whom the bank is maintaining an account or carrying out transaction on their behalf. For example, a parent may open a bank account. Suppose a parent is there. I'm clarifying the meaning of this statement. Suppose a parent is there. So parent may open a bank account on the behalf of their child. So parent can open a bank account on the behalf of the child and manage it until the child reaches a certain stage. In this case, the child is considered a customer. Who is the customer here? Parent is not a customer. This child is a customer. Even though he may not actively operate the account themselves. So let's summarize. Though what we have studied, that institution called bank, when it accept deposit with the purpose of lending or investing, deposits would be repayable to the depositor either immediately or at the end of a specified term. The banker customer relationship is defined by the maintaining an account, having a business relationship, or conducting transaction with the bank. Additionally, a customer can be someone on whose behalf the account is maintained or transaction is conducted. So that's all we have discussed in this slide. Now let's move to the next slide. Let's see what are the content that we have in the next slide. So friends, in the next slide have been explained that beneficiary of transaction. You see it is written clearly. So what does it mean? So in certain financial transactions, there are professional intermediaries. Who are professional intermediaries? Like a stockbroker, like chartered accountant, right? Like solicitors. You can see like solicitors. So these intermediaries may carry out transaction on the behalf of their client. Okay, with involvement of a bank as permitted by the law. So law permit that these intermediaries, they can carry out the transaction on the behalf of their client. So this is as per the law permission, right? So law permit it. So friends, let me give you an example to make the concept more clear. So friends, let's say you hire a stockbroker to buy or sell a stock on your behalf. So what that stockbroker will do, he will buy or sell a stock on your behalf. So that's the role of a stockbroker, you know it already. So friends, the stockbroker will execute the transaction on your behalf, okay, through a bank account which is connected to their brokerage firm. In this case, the bank is involved in facilitating the transaction as per the regulation governing such transaction. Okay, the next point that have been explained here, कि bank need to be cautious, right? Bank need to be cautious about their association with individual. You can see how their association with the individual are or entities involved in financial transaction. For example, if a bank become aware that one of its customer is involved in money laundering, so one of the customer is involved in money laundering case, or suppose or illegal activities. So suppose a customer is involved in money laundering or illegal activities, so bank may decide to terminate its bank business relationship with that customer. Why does it terminate? So this is done to mitigate the reputational and legal risk. Please remember, very important concept. From this question was asked that which type of risk bank is exposed to whenever a customer does some illegal things, illegal activities or money laundering. So please remember, bank is exposed to reputational risk. Another type of risk is called legal risk. Okay, so in such cases, reputational and legal risk are associated. So hopefully you have understood the concept. Okay, now the next point that we have to study is the debtor-creditor relationship. So friends, when a customer deposit money with a bank, so suppose this is a customer, what does he do? He went to a bank and deposited some money. Okay, so friends, the debit credit relationship is established between the bank and a customer. So when you deposit money in your bank account, you are lending money to the bank. The bank owes you the amount you deposited and is obliged to repay to you upon request. In this scenario, you are the creditor. Who are you? Please remember, very important, you are the creditor. Why you are creditor? Because the bank owes you the deposited amount, and bank is a debtor. Why bank is a debtor? The bank is debtor in this case because the bank is because they owe you that money. So let's summarize the fact that have been presented in this slide. So the slide says that the professional intermediary may conduct transaction on behalf of their client through bank as permitted by the law. Bank need to be cautious about their association with their individual or entities. Additionally, when a customer deposits money with the bank, a debtor-creditor relationship is established, where the customer being the creditor lender and bank being the debtor borrower. Hopefully you have understood the concept. Very good. So that's all have been explained in this particular slide. Now let's move to the next slide. Let's see the concept that have been explained in the next slide. So let's see the main feature of this debtor-creditor relationship. So the first point is that when you deposit money in a bank, the bank has the freedom to utilize that money in a manner that benefits its operation. So bank have freedom. You can see it is written that bank can free to use it. Bank has the freedom to utilize that money. Bank can use a deposited fund for lending to other customer, making investment. Bank can do whatever they want, right? So they can lend, they can invest, and whatever they want to do, they can do. So let's suppose an example to make it more clear. Let's say you deposit $1,000. So what you do? Let's make it more clear. So let's say you deposit $1,000 in a bank. Okay, the bank can use that money to provide loan to the individual who want to buy home. Who suppose some person want to start businesses, so bank can use that money to lend to that person. Okay, so that can also be done, and the bank can also invest the money in stock, bond, or other financial instrument to generate return. So this is all about the first point. Now let's discuss the second point. The second point says that when you want to withdraw money from your bank account, you need to make a formal request or demand for payment. So suppose you need $200 in cash. You want $200 in cash. Okay. So you need to go to the bank, fill out a withdrawal form to write a check for that amount. The bank will then process your request and provide you the requested fund. Bank will not pay you automatically without you initiating the withdrawal. Hopefully you have understood. The third point is that when you make a demand for payment, right? So when you make a demand for payment from your bank, it should be done in a specified manner, usually in writing. This can be done through check, draft, withdrawal form, or any other approved method. So for example, if you want to withdraw money from your bank account, you need to write a check or fill a withdrawal form specifying the amount you want to withdraw. So in the withdrawal form you will write, I want to withdraw $100, I want to $100 so much rupees. So you need to submit this request during the bank working hour. Now that's all about this debtor-creditor relationship. Now let's discuss creditor-debtor relationship. Okay, so what does it mean? When the bank lend money to a customer, a creditor-debtor relationship is established. Okay, so bank become the creditor. So bank in this case is lender. So the bank become the creditor, and because they are lending you the money, and you become the debtor because you owe the money in the amount of loan. So suppose, let's take an example. Suppose this is a bank and you take a loan from the bank. Okay, so this is you and you have taken a loan from the bank, right? So the bank become the creditor. Why the bank become the creditor? Because he is the lender. Who is the lender here? Bank is the lender, so that's why bank is the creditor. Now you, who are you? So the customer, you are the, because you are the debtor because you owe the bank the amount of the loan. So you have an obligation to repay the borrowed money along with an agreed upon interest to the bank. So let's summarize the slide. So what have been explained here. So whenever you deposit money in a bank, the bank is free to use the fund as it is deemed beneficial. So to withdraw money, you need to make a formal demand in a specified manner, usually in writing. The bank is not obligated to pay you voluntarily. In the creditor-debtor relationship, when the bank lend money to the customer, the bank become the creditor and the customer become the debtor, with the customer having the responsibility to repay the borrowed amount. Hopefully you have understood this particular slide. I have summarized each and every fact. Now let's move to the next slide. Now let's see what have been explained in the next slide. So the first point, it have been explained here, that when a bank provide a loan or advance to a customer. So let me move to it to very clear. Okay, so suppose this is a okay, so this is a bank, right? This is a bank. So when a bank provide a loan, so what it is doing? It is providing loan to a customer. This is a customer to whom bank the customer. So in this case, bank is creditor or debtor? Tell me. So the bank become the creditor. Obviously, bank become the what? Bank become the creditor, right? Because it is lending the money. And what does customer become? The customer become the debtor. Okay, because it's all the money. Okay, so friends, if you are taking a personal loan from a bank to finance a home renovation project, so suppose you have a home renovation project and you want to take personal loan from the bank. So in that case, who is the debtor, who is the creditor? Please tell me. So in that case, the bank become the creditor because they are providing you the fund, and you become the debtor because you have the responsibility to repay the loan amount along with an interest. right? Because since you have the responsibility to pay the loan amount, so you are the debtor, bank is the creditor. Okay, so now let's discuss bank as a trustee. Let's discuss the bank as a trustee. So who is a trustee? First of all, let's understand who is a trustee in detail, and then after we'll see. So friends, in certain situation, when a customer entrusts valuables, so suppose there are some valuables, there are some securities, so there are some valuable securities or money. So whenever a customer entrusts valuable security or money for a specific purpose to the bank as a trustee. So let's make it more clear using an example. Let's say you have a valuable jewelry, it is you, and you have a jewelry, right? What you have? You have a jewelry. Okay, so you want to keep in secure place, you want to keep in a bank, so you can deposit the jewelry in a safe deposit box. So in a bank, there is a safe deposit box. Okay, so in this case, bank become a trustee. What does bank become? This bank become a trustee. So bank become a trustee. Why? Because they are holding the valuable, holding and safeguarding your valuable on your behalf. Okay, they have a fiduciary duty to ensure the safekeeping of the item entrusted to them. So hopefully you have understood what is the how the bank acts like a trustee. Very good. So friends, so what we have learned in this particular slide, that when a bank provide a loan, the bank become the creditor and the customer become a debtor. When the customer entrusts valuables or money to the bank for safekeeping, the bank as a trustee on the behalf of the customer. And now let's discuss the bailey-bailer relationship in the next slide. Okay, so let's come to the next slide and let's discuss bailey and bailer relationship. So let's see what have been explained. When the customer deposits certain valuables, okay, so when a customer entrusts valuables, bonds, securities, so suppose there are valuables, there are some bond, there are securities, there are other documents, okay, so to the bank or for safekeeping, the bank become the custodian. You can see the bank become the custodian of the securities. Okay, so as a custodian, the bank has the legal responsibility to ensure the safekeeping of the customer property. If a bank fails to exercise reasonable care and their negligence, so if the bank fails, so bank has first of all the primary duty for the safekeeping of that valuables. Okay, whatever you have deposited with the bank, the first duty is that. And if the bank fails, okay, so this bank cannot, if this bank fails to ensure the safekeeping of the customer property, okay, so what it happens then? Who is liable? Tell me on your common sense, using your common sense. If the bank fails, who is the liability? Whose liability it is? Obviously, if the bank fails to exercise reasonable care and their negligence led to any loss or damage to the customer property, the bank can be held liable. So let's say an example. Let's say you have a valuable artwork. You have a valuable artwork that you want to keep in a secure location. You can deposit those artwork in a storage facility provided by the bank. In that case, bank had the custodian of your artwork and is responsible for keeping it safe. If there is a theft or damage to the artwork due to the bank negligence, the bank would be liable for any loss you suffer as a result. So hopefully you have understood bailey and bailer relationship. Okay, now let's see agent principal relationship. So who is an agent and who is an principal? The first thing is, you can see, agent is a person or entity who act on the behalf of other person called the principal. So this agent, this agent act on the behalf of principal. Okay, so this agent acts on the behalf of the other person called principal. So in certain service provided by the bank, such as remittance, remittance like money transfer, like collection of check, like bill, like insurance, like premium, right? So the bank acts like an agent on the behalf of the customer. Suppose you want to pay your electricity bill, but you are not unable to do so personally. So you can authorize your bank, right? You can authorize your bank to pay the bill on your behalf. In this case, the bank acts like your agent, carrying out the task of bill payment on your behalf. The bank receives the money from you and pay the bill, right, to the electricity company as your representative, right? So friends, so let's summarize this slide. Let's summarize what have been explained in this slide. So when a customer deposit valuables, bonds, securities or document with the bank become the custodian. What does bank become? Bank become the custodian of those items and is responsible for any loss caused due to their negligence. So this is the first point we have discussed. In the agent principal relationship, the bank acts like an agent. So what does bank do? Bank acts like an agent. Okay, and it performs certain tasks on the behalf of the customer, such as bill payment or remittance service. The customer is a principal. So bank is an agent and customer is a principal. okay, who delegates authority to the bank as a representative in this specific transaction. So this is all about agent principal relationship, where bank acts like an agent and customer is a principal. Now let's move to the next slide and let's see what have been explained in the next slide. The next slide is okay, we have discussed this agent principal relationship. Okay, so it has been explained that lessor and lessee, okay, okay, one more point, let me clear it, that let's say you want to in certain service which is provided by the bank, such as remittance, collection of bill, insurance, the banks like an agent, we have discussed this. Okay, so now let's discuss lessor and lessee. So in that case, bank acts like a lessor and customer as a lessee. So let's discuss this point. So bank provides safe deposit locker to the customer for use on a lease basis. In this scenario, the relationship between the bank and the customer is that of lessor. So who is the lessor? The bank is the lessor. Please note, bank is the lessor. You can see. Though see, one basic thing is that whoever provide the service, you add a word "er," and whoever gets the service, you add a word "e." So that's how you remember it. So imagine you want to securely store valuable document or possession like jewelry. Okay. So what do? So you can rent a safe deposit locker at the bank. The bank act like a lessor, providing you the locker space for a fee. You as a lessee have exclusive access to the locker and are responsible for storing your valuable security. So for example, if there is a fire in the bank premises, the content of your safe deposit locker are damaged or lost, the bank's liability may be limited to a certain amount. Okay, similarly, if the loss is attributable to the fraud committed by the bank employee, the bank may have some liability but within certain limits. So let's summarize this fact. The agent principal relationship, the bank like an agent on the behalf of the customer. In the lessor lessee relationship, the bank leases safe deposit locker to the customer, where the bank act like a lessor and the customer as a lessee. However, it's important to review the terms and conditions regarding the bank's liability in case of incidents or loss. So that's all for this unit part 1 lecture. This was free and the next part will be available to the paid member only. Those who are interested to get such type of content, such type of explanation, feel free to WhatsApp me on the number shown on the screen. Okay, so feel free to WhatsApp me on this number. I will provide you the detail how to access the course. Thank you.